got to do this webinar.
Good luck.
Thanks.
Godspeed.
This will be like evolution. In a good way. In a good way.
Josh, what's that guy's name that Dan was talking about? I couldn't see it on that email.
Jack Mullen.
I don't think it's me.
It's weird.
I think Amy checked everybody's work.
Yeah. You can mess with the No, I like it, but you can do it via, you can get it even. So here's one. Well, I know, so this guy ends up being, where's he know? Okay. I'm just,
All right, 12 o'clock. About to get started here in about 30 seconds.
that's an example of one where it's like the overlap.
All right, let's jump into it. So this is my weekly webinar for Tuesday, June 22nd. It is 12 o'clock Eastern Time. So let's jump into it. It is the Prop Trader Market Update hosted by yours truly, Derrick Smith. Doing things a little bit different than usual this time around. You know, usually I'm just doing the screen share, but this time I'm also broadcasting through the webcam as well. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure. At the time of recording here, I am pretty long. Market is pretty much sitting at all-time highs. Things are looking pretty bullish. Without a doubt, the easier money's been made to the long side right now. So I've got about 16 long positions on, and I've got one short position on. One controversial short position on, an AMC, which I can talk about in a minute. I am senior trader and registered principal here at T3 Trading Group. I've been with T3 really since 2010. I've been a licensed professional trader with them since 2011. I've mentored well over 100 professional traders in my time at the company, currently managing a group that I think is also in excess of 100 at this point. In my spare time, I'm big into martial arts, I'm big into skiing, and I'm big into stocks. That's basically it. I was actually thinking about this last night. I'm passionate about things that there is no peak level for. That there is always room to seek this like elusive degree of perfection that you can never really find. I don't care how long you've been trading, as an example. You might strive for perfection in trading, but it's something that's impossible to actually achieve. But every day we come in and we study our strengths, we try to eliminate our weaknesses, and we constantly try to take things to the next level by consistently doing the right thing over time and adjusting to the market as it comes together. And I am by no means a perfect trader, so I don't think the perfect trader exists, but that's what I'm striving for. I'm striving to be the best that I can be at trading every day. And it's the same thing with skiing. It's the same thing with martial arts. I've been doing martial arts for 20 years. I used to fight professionally. At one time, I was the #1 kickboxer in the world for my weight class. But there is still always that next level, always that higher peak of martial arts that you can achieve. Skiing and traveling. This last winter, I skied 46 days. I'm a better skier than I've ever been. Skiing chest deep powder, skiing off cliffs, and as I'm skiing off a cliff, I'm seeing a guy throw a double backflip off a cliff that's 4 times the size of the one that, I was scared to be able to hit myself. So there's these constant peaks and plateaus and continuation of the process. You want your own self-development to basically be in a consistent uptrend for the entirety of your life. So that is pretty much the goal, and that's what I'm constantly trying to achieve. So today I'm going to be talking about markets, like always. I'm going to be talking about T3, the things that we have going on here, how you can get involved with us in the team. Here's my email address. Feel free to reach out at any point about anything. And I'm happy to help. I'm happy to chat. I love talking about markets. T3 is a great place to be, so happy to chat about that. And, you want to talk about skiing or where I might be skiing next winter or where I won't be, feel free to reach out to me about that as well. I tend to be a pretty busy guy, but I try to be pretty friendly also. So with that said, let's go to the charts for a little analysis of the market. Interesting few trading sessions here at the end of last week into the beginning of this week. So let's start with the SPYs. Like always, for people who've been following my webinar on a week-to-week basis, you know that my approach is a big picture down to small picture approach. I want the market to tell me what to do initially. The market is where I get my big picture game plan from, and then I work my way down to the smaller picture, to the individual stocks that I want to actually focus on a day-to-day basis, which I'm primarily doing in my research process. I usually start my research process pretty early in the morning. I'm usually signed into the virtual trading floor. I try to be in there 6:30, 7 o'clock in the morning. It's been a little bit more difficult, to be honest, to get in there as early as I was, being back at the office and commuting into the office every day, as opposed to just rolling out of bed at that house in Idaho and grabbing a cup of coffee and signing into the virtual trading floor. But I'm still getting here pretty early. We're getting the research in pretty quick. And I start my research with the big picture down to the small picture, big picture game planning, big picture expectations for the market, how are we handling today's gaps, and then I break it down to the individual names that I'm planning on looking at. So in that spirit, same thing, looking at a daily chart of the SPYs, interesting price action these last 4 trading sessions. It was just, I think, Tuesday of last week that we were touching new all-time highs here in the S&P on June 15th. Then we had the Fed day on Wednesday, created a little bit of a pullback of the market. They pushed forward that dot plot. It scared some people a little bit. Interesting to see that the NASDAQ actually performed really well and didn't have that fear of interest rates coming back online sooner, as a lot of people expected. It was almost counterintuitive, right? So if you look at the TLT, which represents interest rates, and you look at let me see, which day here was that? Wednesday. Wednesday was the 16th, right? So if you look at the TLT, which is interest rates, they initially downticked, but then closed strong, and then the following day it went up a ton. So TLT going higher means interest rates going lower. So despite the fact that the Fed pushed the dot plot forward from 2024 to 2023, that means interest rates going up sooner. The market did the opposite initially. TLT went up, interest rates went down. Interest rates going down. That is good for tech, bad for banks, bad for energy, bad for the reflation trade. And what did we see? Look at this strength that came out of the Qs. Look at this same day, right? Wednesday into Thursday, got killed, even worse into Friday. Well, the whole market took a solid downtick on Friday. Look at the XLF, right? Counterintuitive. XLF got crushed on Thursday into Friday. But in theory, interest rates should be rising sooner. It should be good for the banks, but it all depends upon what is actually priced into the market at that time. And at this point, it was just kind of a weight lifted off the shoulders of the market, where they were anticipating that this was going to happen to a larger degree than actually took place. And that led to interest rates going down, which led to financials being weak, and led to Tech being really strong, led by Apple, led by Amazon, led by Microsoft. So definitely a really interesting market environment here. And then what we saw initially on that Wednesday, SPYs tried to hold 420 support, about 4,200 in the S&P. Held it on a closing basis on Wednesday, held it on a closing basis on Thursday, and then Friday we had this big gap down. This gap on Friday is technically what we call a breakaway gap. That is when the market gaps below or above a support level, in this case gapping below a support level of 420. So the market's gapping below 420. That means that anybody who bought the market for almost the entirety of the month of June is out of the money. What do people do when they're out of the money? They sell, they panic, they get out of the way. So usually this type of gap is not filled on the day in which it occurs, and it was not filled on Friday. We opened up weak, we sold off, we closed really weak. So you can see the SPYs here took an absolute beating. The IWM took an absolute beating, getting back below 225. Key levels of support breaking in the SPYs and the IWM. XLF took a beating. XLE took a beating. These material names like US Steel that we've been paying attention to for a while took a beating. STLD, another steel name, took a beating. FCX, copper, took a beating. And the NASDAQ held up like a champ. The NASDAQ here, Friday's candle, just looks like a little rest day. If all I saw, if you just showed me a chart of the NASDAQ for Friday and I couldn't see anything else, I'd be like, oh, this market looks incredibly strong, incredibly bullish, just took a little bit of a rest day here, a little bit of an inside day rest, setting up for continuation. And then what happened on on Monday, yesterday, is this market just staged this incredible rally back up and recaptured those levels in basically one day. Guys, that's incredibly bullish. It's incredibly bullish. You just shook all these people out, suckered in all these shorts, longs are out of the way, and now you're instantly recapturing those levels. It's incredibly bullish. And look what the NASDAQ is doing today, regaining that relative strength and breaking out into all-time highs. So market looks just so strong right now. Qs are at all-time highs, S&P is a hair away from all-time highs, and IWM is a little bit further away from all-time highs, but while IWM is above 225, it's without a doubt bullish. So all three of my indices are telling me we are in a bull market. The money rotation this market's been constantly showing, the relative strength, relative weakness, is saying we are in a bull market. So what do you want to do? Do you want to be sitting here trying to fight it? Oh, you know, Apple can't be at these prices and Amazon can't be at these prices. They've gone up too much. I want to get short. This Nvidia, it's gone up so much. I want to be short. That is the hard money. The easy money when the market is bullish is to the long side. And that's where you want to be. You got to be very selective in any shorts that you're picking in a bull market. And that's why I like to view the market in terms of bullish, bearish, neutral. Bullish across the board, I really don't want much to do with short selling. Bearish across the board, I really don't want to do too much with long buying unless we get into very extreme territory of the market selling off very hard and fast. And if the market's in that neutral territory, that means I could potentially go long and I could go short. Go long relative strength, go short relative weakness. And again, I've been saying this every Tuesday. The key to the market in 2021 has been an understanding of relative strength and relative weakness, and that it's been constantly rotating. And for a while, it was these energy names, it was these material names. It was what they call the reflation or reopening trade. And now it's flipped, at least for a little period of time here, where it's the NASDAQ, it's tech taking over that leadership again as that TLT caught that really big bid. You know, TLT is in a short-term uptrend right now, which means interest rates are back in a short-term downtrend. So that's what's giving way to the relative strength of the NASDAQ. And it's what's making, you know, we were buying Apple here at 128 on this day for this breakout on June 14th, probably early last week or the week before that, and just continuing to pay, you know, further follow-through on that on a swing trading basis. So that's been the focus. Today I came in and I didn't want to be too aggressive just because yesterday was such a big day. Even though this market is bullish, I want to continue to err to the side of the longs. I really didn't want to be too aggressive. You know, been focused on some of these names that have been in play. Been focused on some of these meme type stocks. Wish was my idea of the day yesterday for continuation through $12. That was a great trade on this level break. A Wall Street Bets name, a Reddit stock, huge volume on that, gave great continuation. Was trading above $14 after hours yesterday, which was an area that I was booking some profit. So, that's what I've been focusing on. And AMC, I hope I don't get too much slack for this, but I'm currently short AMC. I've been shorting it, starting into the 60s, and today's close I think is really important in AMC because they potentially broke it down. So just to recap a little bit, AMC, this pattern in here is a bull pattern, okay? It's a daily bull pattern. And just a couple of trading sessions ago, this thing really looked like it wanted to continue, break out through that $60 to $65 area. And honestly, the technicals here were looking like this thing wanted to go to $100. And what happened? The pattern, it didn't give the continuation. It didn't necessarily fail. You could argue that this pattern is still building out and is a bullish pattern. It didn't necessarily fail, but it didn't go when I felt it should have went, for sure. And then yesterday you had this really weak day in it where it closed at the 80 MA, closed a little bit below $56. And today, I think today is actually a really important day for AMC, despite the fact that the volume on it so far is lower than it's kind of typically been. I think if you get a close below like $53 in AMC, that this pattern is actually starting to break to the downside, and that would be bearish. Bearish to where? Bearish to a move to at least the 21 EMA, if not previous support at $40. Seems very realistic on a weak close today to get that follow through to the downside. So I actually had already been short into this weakness over the course of the last couple of days. I looked to add this. I was able to short some pre-market around $56, caught this big initial down move, but then the stock pivoted pretty well and actually broke its opening highs. I think it shook out pretty well. So right now in AMC, the high of the day and low of the day here are key. I think if you get a close like 52.50 or lower, that's a signal that this pattern here is starting to fail. And here's my concern to the Wall Street Bets community, who, first of all, I support you. I was here for people who follow my my weekly webinar. Back the first time when things were running, back in late January, early February, and GameStop was the rage, and AMC was going, and BB were going, and a bunch of those names were going. You guys remember how they tried to restrict your ability to be able to trade these stocks, restrict your ability to be able to buy these stocks, and that was wrong, right? So I totally support what the Wall Street Bet movement is trying to do, and if you want to buy AMC at $60, I think that you're more than welcome to. The problem I'm seeing is that you're potentially starting to spread yourself out too thin. I think that that's what happened here back in January also, where now what I'm seeing is everyone wants someone else to buy AMC. Because you're already in hodling, you want somebody else to continue to buy it, but then everyone is pushing over to the next big Wall Street Bets name. It's Wish, and then it's Sundial, and then it's it's Tilray, and it's like a new name every day. But what's going to end up happening is if you don't have that concentrated firepower, then you're going to end up kind of losing it across the board, is really what I think, and that's kind of what I'm starting to potentially see. I could be wrong. As a matter of fact, I almost hope I'm wrong. But for the time being, at least for a trade here, and I know this is actually tailing up really strong as we're talking, so maybe the Wall Street Bets community is like, oh man, this guy Derrick must be a hedgy, so let's squeeze him. He's short. I'm small enough that you're not going to be able to hurt me too much. But that's kind of the potential fear that I have here. So I added to my short pre-market here for this breakdown, was able to capture that. I covered some of my short into this move, added some back along the way here, and now we'll see how this plays out. I'll probably close out as some of my position for a little bit of a loss should new highs actually break, which now looks like that is becoming more and more of a possibility. So definitely have AMC on my radar, but at the same time I'm able to be long Wish from yesterday, which I think is like number 1 or number 2 kind of discussed stock right now. Bed Bath & Beyond, I'm still very bullish on Bed Bath & Beyond. This is a very legitimate, real company as far as I'm concerned. They've transformed their business model. Their business model's looking great. They've got good cash flow coming in now. They've got a strong buyback coming in. It held this key $27 yesterday perfectly. Yesterday's low is $27.05. That's the low of this massive volume ignition bar that it had when they had a big one-day short squeeze. The stock went from $27 to $44.50 throughout the day. I was long throughout that entire move. I got out of it around 40, re-entered my position into this move down, and now building back into it. So that's kind of where we're at, and that's kind of been the big focus for me and my team right now, is that this market looks really bullish. I want to err to the side of the longs. With that said, I don't want to be too aggressive right now with anything that's related to the market. And I'm trading these stocks that are in play that are giving these great movements. I'm trading that AMC. I'm trading that Wish. I had a great trade in this Sundial where we were looking at buying at 75 cents, and then I cleared my position out at $1.40. So definitely being involved in some of these. Sumo is a trade that I've been in for a while. This is giving great technical continuation through $22 today. Pattern here looks excellent. Market looks bullish, and that's pretty much where we're at. That's kind of how things stand at this time. So I guess with that said, let's talk a little bit about how you could participate in the team that I'm running of professional traders. And the way you could do that is by becoming a professional proprietary trader yourself. T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We have now 4 physical offices, including our Manhattan headquarter office. Still, even though I'm back in the Manhattan office, traders are not really welcome back yet because of the COVID situation. And honestly, things have gone so well on a remote basis. You could be anywhere in the United States and be part of the team, utilizing the ProDesk virtual trading floor, participating in our daily morning and afternoon meeting, becoming part of the team through that, and gaining the information that we're providing in our daily meetings. So if you want to be remote anywhere, what you got to have is a Windows-based computer and decent internet. And you have to pass licensing exams, because T3 is an SEC broker-dealer and member of FINRECIPIC. That means all of our traders have to become professionally licensed with an SIE and Series 57 exam. We'll sponsor you for the exams. We'll work with you to get study materials through our partners at Notman. You will also have to pass a background check in order to get started with us. Once those exams are passed, that's when we can get started with trading. We have several different trading software options. We have Lightspeed, Sterling Trader Pro, Wolverine, Realtick. We're in the process of onboarding another one right now. I'm not sure if that's official yet, so I'm not going to announce it this week. Maybe I'll announce it next week, but we're getting one more trading platform I think people are going to be excited about because it's a popular one. So we've got 4 trading software options for our professional traders right now. It's about to become 5 for our retail traders. We only have Sterling Trader Pro, which is an excellent professional platform. As traders here at T3, you can be involved in equities trading, options trading, futures trading, options on futures. Basically, whatever you're trying to trade, we have exposure to it in one way or another. So, reach out to me and I'll speak to you about it myself, or I'll set you up with the right person. Personally, I'm an equities trader, and don't get me wrong, I've got options traders on the team, and you can become one. Most of the people I speak with who trade options, they do it in a retail account because of the natural leverage that's inherent in the product. I don't think that that's actually necessary on the prop trading side of things because we provide you with so much capital access. For me, I ask myself, why do I want to trade a less liquid product that's subject to time decay just for capital access when T3 already gives me as much capital access as I could ever want? With that said, the people on my team who do trade options, they primarily trade complex option strategies, different types of spread trades or calendars or whatever, or they do a lot of swing trading and they sell covered calls for cash flow purposes and for risk management purposes. So regardless of what your interest is, definitely reach out to me. New traders should be aware that I personally pride myself on the training and development that my team and I have created over the years here. You will not go it alone. I conduct a morning meeting every day at 9 a.m. for the team, an afternoon meeting at 10 after 4. Every afternoon meeting ends in a group Q&A session where that's an opportunity for everyone on the team to ask any questions that they have about honestly anything, and we will take care of that for you. And there's a 1-month optional training program for when people first get started as well. So if you're trading on your own right now and you're trying to figure things out, that's fine, but it's difficult. Get yourself involved with a professional team that'll help accelerate you through the learning curve. You will have to fund your account in order to trade with us. So you have to fund your professional account with what we call a capital contribution. And then typically we start by providing capital access to our traders at 20 times their contribution for equity day trading and 8 times their contribution for overnight positions. So for example, someone who were to put $50,000 into an account, we basically start by allocating you $1 million to work with right from the get-go. And then you're compensated through a generous profit split that's in your favor. And again, all that training, development, mentorship, education, everything I talked about earlier that I provide to my team, that's done for free. Our goal is to make you as successful as possible. And if you are an experienced trader, this is a great place to be as well, because you can utilize our balance sheet to take your trading to the next level. So if you want to be someone who comes in with $1 million capital contribution because you want access to $20 million, it's probably not a problem. Reach out to me. There's my email address, and it'll be there again, I believe, at the end. And guess what? If you get started now, you get access to all of this other stuff for free. You get access to my virtual trading floor. You get access to my training program. You get access to Scott Redler, the Red Dog. You get his virtual trading floor. You get the Redler All Access newsletter. I mean, this is like, I don't know, $6,000 worth of stuff on an annual basis that you get for free. Why do we give this for free? Why do I do all this work that I do for my team? It's very simple. It's a win-win situation. If you trade with us and I can help you become a more successful trader, you're going to be making money for yourself, so that's going to have you happy. T3 is going to be making money. That's going to have T3 happy. I would rather bring someone in and give you all this value for free, because you could become the next trader who's with us for a decade or 2 decades and turns this into your career and has all the joys and benefits of being a professional trader. So reach out. I genuinely think that our offering is the best offering on the street for the active trader. Whether you're doing it through our retail accounts or you're doing it through our professional accounts, there's just nothing else that's out there that's offering you professional software, direct market access, and access to a team and development, training, education for free. It's just an incredible thing that we're trying to do here at T3. So become part of the community. I got on my team, I've got people who are Wall Street veterans who've been trading professionally for decades, former hedge fund managers, floor traders, pit traders, all the way down to others who are at the entry level, just getting their career started for the first time. Make no mistake about it, this is a difficult business. But if it's your passion, in the same way that it's my passion, shoot me an email and let's get started. So with that said, I'm going to jump back into managing my positions here. I hope everyone's having a great day. I hope everyone's having a great week. I hope you're continuing to learn by tuning into these weekly webinars, and I hope you guys get more involved with T3. Get involved with my community of professional traders through the Pro Desk. There's multiple ways to be able to do it. So have a great rest of your day, everybody, and I will see you